Hi there. Hi there, welcome to Prime Time. I'm Paul Orford and I'm back with Edward from Bullion Capital. And over lunch we were discussing really the apocalypse, should we say, of the financial system and why gold will always be, has always been the perfect hedge against Armageddon. Because if you would never hear, when was it, 2013, the collapse of the Cypriot banking system, you'll never really know what it's like to have assets in inverted commas in a bank, but you can only withdraw, what's it, $300 a day, 300 euros a day? And from that, it really makes you think about how the whole system works. So, first of all, the best place to start really is, why should we have gold in a situation in modern day capitalism?
So gold is a 5,000-year track record. I think every currency in the world we've had has failed so far. So it's a little hard to weigh it up. I know there's people out there say that's an old relic of the use, but gold has held its intrinsic value for that long. Why is it now? I mean, very, very topical that we sit down and talk about this now. Gold has suddenly got a bid. Everybody in the market is talking about, why is the gold price going up? Are we entering a bull market? And I think the market's woken up. The market has seen, first of all, 13 trillion of non-yield or negatively yielding asset or bonds that are sitting out there in the market. So the cost to carry of holding gold suddenly doesn't seem that bad. The European banking crisis, I would call it. It has not passed. If you only have to look at the stocks index of the European banks, it's at an all-time low. The European banks are still a humongous problem. The Fed has been tightening. It looks like, we're in that stage of the market's now going to reverse. That was the end of their tightening cycle. Probably the slimmest tightening cycle we've ever seen, and we're going back into physical stimulation of the economy. A slowdown in the economy. As much as they don't want to say it, you talk to any participant across the world, which I do, the market's slowing down. They all see a recession on the highlight. And then what I want to call the baby booming generation. So the baby boomers for the last 30 years have been buying equities. They've been putting money into their pensions. Their pensions are buying equities. Well, let's have a look at their pension funds. Their pension fund typically needed 8% to fund their liabilities. We haven't had that for 10 years. So pension have massive unfunded liabilities. Something will go wrong there. Okay, pensioners might, their pensions might be reduced. They'll still survive, but how will they survive? They'll need to sell off other assets, will be equities. So they'll start selling their equities in the market. At the same time, the pension funds will have a lot of redemptions. We'll also start selling equities. Where is the bid for the equities coming from suddenly? They've been the bid for so many years on an institutional and a retail level. And they both go away. So we have a huge collapse on that side of the market. On another perspective, we all trade in US dollars or euros, and they seem quite stable currencies. If you look at gold in other currencies but the US dollar, it's already in a bull market, and it's been that way for quite a while. And we can take some great examples. Right across the road, we have the Turks. 2 years ago, the Turkish lira was 3.5 Turkish liras to the euro. It now trades at almost 7 to 1. So that's half of, if you're in cash, you've devalued your net worth by half over 2 years. And this isn't, and this is not, a single example. Argentina, I went to Argentina 3 years ago. It was 10 to 1. That's the Argentinian peso to the euro. It went to 14 to yuan, and I was excited because I got a 40% discount on my holiday. It's now at 44 to 1. Massive collapse. Venezuela, the hyperinflation of 80,000, inflation of 80,000 last year. Total wipeout of any wealth from the richest country in Latin America to the poorest in 10 years. And
quite a reverse, isn't it, man? It's staggering how it's gone. So, if you're, let's say it is the end of days and you're the average Joe, how would you have gold? Would it be in coins, or if I was to exchange a portion of gold for, water, how would we do this?
So if you're going to take the doomsday prep view, actually most people would suggest buy a gold coin or two, keep it at home. Buy some silver coins, probably even better because you can do smaller transactions. Keep a roll sitting at home. If anything, even if you don't use them, they're a pretty investment. You can get some really nice coins, sit them in your safe, and it's a long-term hedge. If you think of silver now at $15 an ounce, around this kind of price, silver's been up at 50. I mean, that's a fantastic trade-off, for holding something that's not really going to go much further down. The same with the gold price. People say, well, what if the gold price collapses? The gold price is not going to go. We've already tested the low. 1050 was the last kind of dip that we got down there. At $1,000, that's the cost to produce gold nowadays. So the price, okay, maybe for a couple of weeks it will drop below that, but people will just stop selling it to the market. Nobody's going to sell it at a loss in our industry. So hold some of that. We tend to look for, that's the Armageddon, that's the crisis. But we'll kind of come out of the crisis, and that's what a lot of my customers are holding physical metal around the world for, because they see immense opportunity. When there's a next huge catastrophe, they're going to be sitting on something liquid. They can get their cash in, and they can go and make great advantage of that. They can go and buy properties. They can go and they can make investment when there's blood on the street.
Which is a time to do it, isn't it? Naturally.
Which is a Warren Buffett strategy of go when there's blood on the street.
Because it's quite interesting. Over lunch, we were discussing that basically a piece of paper or a note is worth nothing, and you should really, if an Indian farmer, for example, gives you an IOU, that's worth something because he's naturally got gold somewhere. And we got it completely the wrong way round, it seems. Yeah,
well, if you take that perspective, look at the US government have Fort Knox, and we've got a gold allocation. It's 8,000 tons of gold approximately that sits in that vault. The Indian population have 22,000 tons of gold in their pocket, sitting under their bed. So why shouldn't we trust an IOU from them as opposed to a dollar bill, which is just a US government IOU? I think where people have gone, or where we've been tricked in our lifetime, is nobody's had a financial education to what money is. And people often ask me a lot, because there's a lot of talk about Bitcoin. What is Bitcoin? And I don't think that's a monetary question anymore. I think it's a philosophical question. What is money? We go to a bank and we say, oh, well, I have money in the bank. Well, legally, you don't even own the money that you have sitting in the bank. You're an unsecured creditor to that bank. And people don't understand that fine line. That means if that bank goes bankrupt, you're just one of many people saying, you owe me money. That's not your money anymore. And these Eastern cultures that understand that, they might be backwards in everything else, but they wear their wealth. They walk around with their gold on them because they wear their wealth, and it's tangible. Nobody can steal it. Nobody can take it off them. It belongs to them. They have total ownership. Their only counterparty risk is themselves. If they lose it or someone breaks in their home, so they understand this to a much stronger degree. Turkey, that we said about the Turkish lira. The Turkish lira has been notoriously unstable over the years. It's quite interesting. If you go to Turkey and they have a baby, they don't give you money as a present. They go out and buy small bars of gold and they pin that on the baby. And that money is typically, or that gold is for when the child, his dowry, when he gets married or when he goes to university, so that they understand that the currency might be worth nothing by the time he gets in 21 years. But the gold will store its value that whole way through.
All right, cool. Well, there's definitely food for thought there. I mean, based upon what you're saying, we should go long gold, long shotgun shells, water, because you never know, especially in this country, man. Like, I'm not saying anything bad about Cyprus, but where we've been there before, you're always at the back of your mind thinking...
Fool me once.
Yeah. Cool. All right, well, look, we're definitely going to have Edward back on again, because he certainly knows his stuff, and it's always good to talk about gold. Everyone enjoys gold. It's always a nice story to talk about. One last thing. I know it's like the impossible question. Where do you think gold will stop? Like 1,500, 2,000?
It's a very good question. We've got a lot of kind of baking of the cake to see where it's going. I think our short-term target of 1,500 is quite attainable. In the long term, if we do have a bull market, and at 1,500 we can definitely wave our hands and say this bull market has gone in full pledge, well, it should then take out the previous highs. And we were at 1,900, so I mean, there's people in the market calling a 5,000, 2,000, these kind of, but I think 2,000 is very attainable. In the Australian market, we've just had all-time highs. Gold is trading over 2,000 Australian dollars. It's never been that high before. It's an all-time record. So I definitely think there's a lot of space to go.
All right, awesome. Well, look, he's going to be back in a couple of weeks. He's just off, is it diving in Papua New Guinea or Indonesia?
Indonesia.
We'll let you do some more investigating out there, and we'll get you back on. So cheers for coming on. Thanks for lunch. And, we'll see you again soon. Thanks a lot, everyone. Bye-bye.